The Bollinger Bands are potentially showing something on the chart that we have seen 2 times in the past. In both instances mark the start of the bull run. Will this play out again? Let's go ahead and dive in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. In today's video, we're going to be doing a macro technical analysis, going over a variety of technical indicators such as the market cipher A, the Bollinger Bands, and so much more. A few of these indicators are showing us things we have not seen in years that have potentially marked the start of prior bull markets. We're going to be reviewing and assessing these in the video today. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our help, our news, and our daily video chat. If you want to join over 600 members, go ahead and contact me in the pinned comment of the free channel for more info. Let's dive into the video, guys, starting on the market data. How are we looking at the moment? 24-hour volume is up 44.29%. This brings us to a total of 69 billion. You can see that on the top left-hand corner. 24-hour liquidations with rising volume are up 139%, sitting at 91 million. And of course, as we come out of the weekend, it is pretty standard that we start to see volume and liquidations rise. The volatility index is still falling very gradually on the 30, and on the 60-day period, we still do see that overall incline, which is of course good to see. Moving over to the liquidations of a total 91 million, we can see 64 million came from longs and 26 million came from shorts, as Bitcoin did have a short-term correction from that 38k range, pushing down to around 37,200, again liquidating quite an amount of long positions there. Let's go ahead, guys, and jump over to the DXY. Looking at the DXY and the broader markets over here, we can take, well, first and foremost, let's go ahead and take a look at this chart, which is going to be the S&P 500. We can see the S&P 500 is potentially reaching an area of resistance over here. We've got a few different annotations on the chart over here. We can see we have that downtrending diagonal resistance represented by, of course, that black diagonal line. We have our short-term downtrending trend line represented by this orange line, and we have a few different scenarios that can play out. Currently, we are in a short-term uptrend. The uptrend has developed from our local low range, and again we broke out of that downtrend upon the breakout of this orange trend line. We are in this short-term compression range between the diagonal downtrending resistance, which is our macro resistance, and of course this red zone, which is our current horizontal support. A break above this diagonal level will result in a continuation upwards to retest this all-time high at 4,800. If we do lose this horizontal base, we could see a correction lower. Looking at the Dow Jones, exactly the same scenario over here, right? We have that respective downtrending diagonal trend line on a higher time frame. We have that short-term downtrending trend line right over here. Of course, we have broken above that. If we are able to break above this diagonal trend line, we will likely see a continuation to our highs. However, if we are unable to hold above this red box over here, we're very likely to see a pullback towards our lower level of support. If we go ahead and take a look at the DXY, I'm going to have to bring that one up really quickly. We can see again, we had a fair bit of price action recently for the DXY. We had a nice strong uptrend that we did develop. We've come down and now we are retesting our base of support. We said in yesterday's video that again, support is support until it is not. We can see momentum is starting to flatten out over here. We can see the price action is definitely losing volatility as our smaller moving averages are pushing closer to our price action as we have reached support. So what we are starting to see as we are starting to see this support actually come into play. We are starting to see the volatility and momentum reduce, and this is potentially indicative of, again, a reversal developing. So the support is currently acting in support. We could potentially see a reversal. If we do see a reversal, we will remain in a downtrend on the DXY, provided we remain underneath this diagonal black line. If we do lose this local low support, we then expect a continuation towards our lower level. Of course, if we get that breakdown, the S&P 500, the Dow Jones will likely continue higher. If we get the bounce, if we get a pull back upwards over here, and if we break above this downtrending diagonal trend line, we could see corrections across the board for those markets. Let's go ahead, guys, and jump into Bitcoin. But before we do, a quick word from BitGet and BingX. Make sure to sign up there to support the channel. Quick word for them. Let's go ahead and get into it. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right-hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, so back into the charts over here for Bitcoin. As we said, we have so much to talk about today, guys. We're going to be discussing the higher time frames. We'll be discussing the short-term charts, but most importantly, there are two indicators we really want to be talking about on the monthly. This is going to be our market cipher A and our Bollinger Band indicator. We're also going to show you some fib levels, but more importantly, discussing these two, as they're both showing just now potential indicators or potential signs that we haven't seen for many, many months, if not years. And the prior times these did pop up, it marked the start of the potential bull market, or it marked at least the start of a higher time frame uptrend that will continue for an extended period of months. So let's go ahead and start on the market cipher A. We're taking a look at the market cipher over here, and the most important things we want to be taking a look at these blue triangles. Now, the blue triangle represents simply the crossover of the EMA2 and EMA3. Now, depending on your settings, these will change. These are not the default settings. It does say default here. That is only because I save these as default. These are my personal, specifically adjusted settings for my trading. So if you want to copy them, here's your moment that this is the settings we're using for the market cipher A. So if you bring up the market cipher A, you may see these different blue triangles and crosses in different positions, but this is the one we are using. If we take a look at the price action, the last two times we saw the blue triangles were all the way back over here. January 2016, we'll go ahead and put this green box over it, and we saw a blue triangle print all the way back over here, which was of course back in May 2019. Since printing the blue triangle, we never ever saw a monthly candle close back underneath the 50 EMA, which is that red line, okay, until we of course printed that cross. So if we take a look at the price action, we remained above the 50 EMA the entire time until we printed the cross, which resulted in a break underneath it. If we look at the 2019 scenario, we printed the blue triangle. We remained above the 50 EMA the entire time until we printed the cross, okay, which again, a cross is a close underneath the 2 and 3 moving average. And again, the 2 and 3 moving average is represented as the 15 and 17 EMA, which resulted in a break underneath. We have once again, in 4 days' time, we'll confirm whether or not we will be printing a blue triangle. If so, according to historical price action, we can say that it is unlikely we are going to close a monthly candle sub the 50 EMA, which is sitting at 25.4K, again until the end of next bull run top and entrance into the next bear market past 2025. This is actually significant for the macro charts. This is very important, and this is actually a very interesting find that I'll be highly interesting to watch how this develops over the coming months and years. So keep that one in mind, guys. Lock it in the back of your head and watch it. Pretty interesting. It is suggesting that in 4 days, if we're able to close and lock in this blue triangle, we are not going to see a monthly candle close under 25.4K again, which is significant. But so we look at the macro charts, 25.4K is an area of utmost significance, as losing 25.4K, which of course is this level of support over here, this base of support, is actually the point of which Bitcoin will enter a macro downtrend. Okay, we actually enter a macro downtrend underneath 25.4, 24.4. So what this is telling us there is almost no chance now, according to historical data, that we will enter a new macro downtrend, which is phenomenal for the future of Bitcoin and of course the potential upcoming bull run we could see develop over the next coming year and a half, which is fantastic stuff. The next indicator we want to take a look at is going to be the Bollinger Bands. And the Bollinger Bands is not a tool I use often. However, it is a pretty interesting one because it marks overall volatility of asset over a period of time and how the volatility is progressing in real time. What we have seen in the past, specifically the month of May 2016 and the month of October 2020, is a break and close above the Bollinger Band upper band. We broke and closed a monthly candle above the Bollinger Band upper band. In fact, that marked the uptrend. That marked the start of the bull run according to the Bollinger Band. We actually saw the price travel up above that upper band the entire time before breaking below the midline, resulting in capitulation towards lows. We saw again in 2020 a break above the upper band on the monthly chart, resulting in the continuation up from the midline all the way up into a broke again a monthly candle below the midline, which resulted in capitulation to new lows. So in this instance, if we see a monthly candle close above the upper band of the Bollinger Bands, we could see history repeat itself. Again, we have 4 days remaining until the monthly candle close, and the Bollinger Band upper band is sitting above 38,000. Now, if you've been paying attention, you would know $38,000 is a critical level of resistance on not only the macro chart, but also the short-term chart. So we're starting to see now just how these levels are actually starting to line up with massive amounts of confluence, and again, further illustrating how significant these macro resistances are for continuations higher. So we'll go over it one more time, guys. The Bollinger Bands is showing us in prior cycles, the start of the prior bull runs have been triggered by a monthly candle close above the Bollinger Band upper band. In 4 days' time, we are likely going to see whether or not we will close this month above that level, triggering a potential repeat of what we have seen in the past, or we will reject from this level and potentially see a short-term correction. In 4 days' time, we are going to find out whether or not the market cipher A will print that blue triangle or not. If it does, we can say with a higher degree of certainty, it is very, very unlikely Bitcoin will come back and close under 25.2K prior to reaching a new all-time high, which again is significant. Let's go over to the monthly chart on this chart, which is a 4-year cycle chart, discuss what is going on, likely scenarios, and then go to the small time frame. So we take a look at this chart and we say, well, how does this matter? What is going on? What does a 4-year cycle suggest? When we're in the next bull run? And what are we really watching out for? The most important thing we're watching out for this chart is 2 things. The structural levels, okay, and the 4-year cycle. These structural levels is less of a theory. The 4-year cycle is more of a theory. At some point, sometime, the 4-year cycle will likely fail, okay? It cannot go on forever. At some point, it will fail. However, these structural levels are more significant, as they represent key resistances and triggers on the chart that will indicate shifts between different phases and different trends, meaning a shift from a weekly uptrend to a macro uptrend, maybe a macro uptrend to a weekly downtrend, or maybe a daily uptrend into a weekly uptrend. These trigger points indicate shifts of strength relative to prior price action. If we take a look at the past, we have seen two key levels. We have seen the horizontal level, which is represented by the solid black line, and we have seen the horizontal level represented by the dotted trend line. The dotted trend line actually represents the dead cap bounce high of the prior bear market. The dead cap bounce high of the prior bear market, the dead cap bounce high of the prior bear market. The horizontal line represents the base of support developed before capitulation in the bear market, okay? So it's the point of which the price went to before the bounce of the dead cat bounce, that also represents the base of support, meaning once we lost that level, we saw capitulation to our lows. So two key significant levels. What we have seen in the past is every single time we get a monthly close above the horizontal solid line, we will eventually see a continuation to retest the dotted trend line prior to a correction, okay? So in this instance, we have closed a monthly candle above the horizontal solid line. According to historical data, we should see a continuation at some point to 48K prior to retesting 32,000. That's significant. If we take a look at the prior price action, only after we saw a retest of the dotted trend line did we see a significant correction. This correction over here was, let's take a look, around about 25%, 26%. In our 2020 scenario, we saw a stronger correction. Again, around 45%. We're not going to take into consideration that massive wick that was COVID, of course, around 45%. In this instance, we could potentially see a correction back down to 32, which will be around 30%. So according to historical data, the next macro target is 48K. This is where it gets very interesting. If we take a look at that 48K level, we take a look at the dotted trend line, every single time we close a monthly candle above that level, right there, that is what marks the start of the bull market for Bitcoin. And in both instances, this monthly candle close has occurred within the bull market phase of the 4-year cycle, which according to current date ranges will be between April 2024 and of course, October 2025. So what does this mean to you? It means Bitcoin is not yet in a bull market. We still have a potential to see a correction. It's very unlikely the correction will break the 4-year cycle and send us to a new macro downtrend. According to our technical indicators, we are starting to see a lot of strength. According to some of the things we've seen play out in prior cycles, we're starting to see them play out again. According to our structural levels, we have a whole bunch of support below us. That does not mean we can't see a correction, but what it is setting up for, it is telling us what we have seen in the past is beginning to play out again. So you have time to accumulate, you have time to plan and prepare. You don't need to feel rushed, don't ape in, don't FOMO in, pay attention to the charts, prepare to look at these pullbacks and look for opportunities, okay? Let's go ahead and dive into the daily and then short term really quickly. Daily chart, guys. Taking a look at the 12-hour to start off with. We said in yesterday's video, we're looking at this particular trend line on the RSI. This particular trend line is the overall momentum. What we have seen recently is an uptrend into resistance with falling momentum. This is a bearish divergence. A bearish divergence is representative of overall exhaustion and weakness. When we see exhaustion and weakness at resistance, the probability for a correction is relatively large. If we do see a correction, we're going to be talking about in a second. We'll talk about exactly where we could go, exactly what we're expecting on the short term, but let's go ahead and zoom out again. If we do see a correction, we are looking for, again, a potential pullback towards these lows. We'll discuss that in just a moment. However, this compression, this upward accumulation, this reduction in volatility and momentum does not necessarily mean with certainty we are going to see a pullback, because the overall uptrend is still intact. And the uptrend, the trend is your friend until it ends. If we do see the RSI break upwards, that would indicate a positive shift in momentum, which would represent the selling pressure from this resistance, the selling pressure from this resistance has been absorbed by the buyers pushing the price upwards. We're seeing higher lows, higher lows, higher lows, and that again is representative that the bulls are still currently stepping in and attempting to challenge this resistance. So this isn't me saying we're 100% going to see a breakup. This isn't me saying we're 100% going to see a breakdown. This is me saying watch the data, because the data will tell you what the buyers and sellers are doing and how the strength is shifting between them. And again, looking at that information, and you can take a look at the probabilities of certain moves. So right now, resistance is resistance until it is not. And again, if we look at the VIP, if we look at what we've been trading, we did take a short on Bitcoin for that very reason. Why we took a short on Bitcoin, we saw a nice 65% profit. However, we're still open to the idea, because we're in a macro uptrend, we're in a short-term uptrend. If this does flip upwards, that would indicate, again, the bulls have reclaimed strength and are able to push the prices higher. So let's talk about the short-term price action and what is going on. So first and foremost, it's very, very obvious, and we'll keep it very, very brief. If we see a break over 38K, that is going to be a break of our bullish trigger, which will result in a uptrend continuation, okay? We have 4 days left of a month. Remember, if we break above 38K, we'll be closing a monthly candle above the 38K macro resistance, but more important as well, closing a monthly candle above the Bollinger Bands according to our monthly chart, which will trigger a higher time frame continuation upwards. So the monthly candle close is of utmost significance this month. So that is the uptrend. Very simple. The uptrend is represented by this uptrending support line, the diagonal trend line. While we remain above this diagonal trend line, we do have a possibility to break above the bullish trigger and continue upwards. Every single correction, every single dip should be assumed to be healthy while we remain above the uptrending trend line. If we break above the uptrending trend line and we break above this horizontal resistance, we are likely to see a continuation to 40,000. If, however, we see a loss of the uptrending support line, that is when we will see this weakness on the 12-hour and daily actually develop into a correction. How low can the correction take us? Well, let's keep it very simple, guys. First and foremost, we are looking for these liquidity points. So this fake up point is now going to be acting as a liquidity point. This gap in the VRPV. We are looking for around 36,000. We are looking for these local lows. We're looking for 33.35. Again, the range low. If we do retest that point, we will have developed a parallel channel from the 38 to the 33.3 trigger point. If we take a look, bullish trigger, bearish trigger, local low, local high. This is going to be a major, major target if we lose this uptrend for a continuation lower. This area will act as a major support where either we'll bounce and continue upwards, or if we do lose the support level, we will be filling the VRPV gap according to the historical price action, which again is a volatility gap over here represented by this vector candle. And of course, that will result in a continuation to retest this local high point liquidity at 30,642. Keep it simple, guys. The charts are literally telling you, they're literally telling you what is going to happen. There's no need to overcomplicate it. Remember, your job as a trader, this is where everyone gets it wrong. This is where people on Twitter get it wrong, new people. Your job as a trader is not to predict the future. You are not a fortune teller. You are not a psychic. Do not expect it of yourself, and do not set yourself up to lie to yourself that you are able to do it. Your job is not to predict the future. Your job is to assess what is happening in real time and historically apply that information to the current situation, and of course assign probabilities to certain moves. Okay, you are setting up a plan of action based on the structural and technical data to execute at a future date. Okay, we can see at these levels, we have trigger points of resistance, we have volatility gaps, we can see the probability of a continuation higher from the point, again from a break out of the structure, will result in a continuation higher, and therefore we know if we break this level, we are going to be looking for more longs over shorts, and we will actually have a greater probability of success when that occurs, okay? So, if anything you take away from this, guys, take a step back, identify, assess and analyze, and then put that information to practice into future periods. Thanks for watching. Catch you guys in the next one. Cheers.